It's about that time. It's about that time. Of course, every time you get on the camera, you start noticing all the things about yourself that need to be adjusted, right? You start noticing that I need to adjust some stuff because when it's just you, you're not thinking about all that stuff. You're just like, it's just me. It's just me. You get on the camera and you start looking at all the things. And of course, you see all the stuff and things you should do different when you're on the camera. So, hey, welcome. Welcome, welcome. We're going to go live today to talk about what kind of trade things did we have from the previous days that went really well. What did we have trade wise that went really well from a couple days ago? And what can we look at for trades today? Come on in, as they say, come on in, come on in. Let me make sure. Oh, Instagram is here. Wonderful, wonderful, wonderful. It says I'm live. Okay. Instagram, I'm not always sure when it says you're live because it's new. Instagram over here is new. It's new over here. Come on in. Let's talk about some trades that we had from Sunday's call. And then let's look at a few more for today. Get logged into our, it is 2:00, right? Yes, yes, yes. Hopefully Facebook has us up and running. Let me go and check and make sure that Facebook has us up and running. Facebook, are you live? Are you live? Yes, I am. I am live. Wonderful. Wonderful. So what we had was I mentioned in the email that I sent that we went over some stuff on Sunday. We went over Affirm, Riot, and I think we talked about Unity. I'm pretty sure we talked about those three. Well, what I did was I entered those three. I entered Affirm, Riot, and Unity. I'm looking over here because this is my list. Affirm, Riot, and Unity. I entered all of those on Monday morning. I entered them, collected my Premier and then was able to close them on Tuesday with profits. Entered on Monday, closed on Tuesday with profits. $53. I used $400 of collateral in order to do these trades. Get that out of the way. And I made $53. So $400 of collateral, $53 in profits. So let's say $53 divided by 400 equals about 13% return on collateral in 24 hours. I was excited about it. Some folks may see and think that, oh, that ain't really nothing. But that was a day's worth of selling credits, $53. Whoop, whoop. Yes, yes, yes. I did Riot, Affirm, which we're going to talk about again today, and Unity. Riot, Affirm, and Unity. Those were the three I did on Monday morning. I did some more Tuesday, which they're ready. Honestly, some of them are ready to close today. I think I did Mara yesterday, and it's ready to close today. I think I got an Upstart that's not too far from being ready to close. But that's what we're talking about. We had a list of trades, right? Every week I put out a list of trades. Y'all already know. I was gonna say, do y'all know who I am? But y'all already know who I am. I am Arlissa Pinkleton, educator to trader. And nope, this doesn't go over there. It goes over here. And I coach sellers. I coach those who are in the seller space, the option seller space, those who are interested in making profits and premiums. Because when you're a seller, you make money as premiums. You get paid to trade when you are a seller. You get paid to trade. Who wouldn't want that? You get paid to trade. This is a list of the ones that we had that I gave out over the weekend. I think it came out on Sunday. This list comes out every Sunday generally. I usually put it out on Sundays. Sometimes I try to get it on Saturdays, but usually it's Sundays. This is a list of the potential trades that you could look at. It says possible trades, trade ideas, not financial advice, only here to see if you're interested in making a few dollars as a seller. All right, this is what we did. So I did Riot here, right? Oh, no, you can't see that screen. I did Riot. There we go. I was pointing at the other screen. Riot and Unity, and I believe I did Affirm. I did all put credit spreads, right? Carvana, this is what we're going to talk about. Let's go and talk about that now. We're going to talk about 3 today. Is it 3 or 4? 4. We're going to talk about Carvana, Save, Affirm, and Carnival Cruise Lines. Save is over here on the list. Save is already on this list too. I didn't trade Save on Monday, but it's on the list. I actually traded it as a put credit spread yesterday. Save, Carvana, enter the Carvana trade today. May still be opportunity there. So let's go look at that. Affirm may still be opportunity there for you too. And Carnival Cruise Line opportunity. All these are opportunities that you can get in on today with expiration of this coming Friday. Carnival Cruise Line and Affirm. Those are the 4 we're going to talk about here in a minute. Iron Condor. If you don't know what an Iron Condor is, it's basically where you do a put credit spread and a call credit spread at the same time. Iron Condor equals the teacher in me wants to always make sure stuff can be seen, because some people are visual learners, some people are listeners. They can hear it and it's fine. But many people, me included, are visual. They need to be able to see it. Now, if you get multiple, yeah, you logged in just in time. If you get in, if you see, you can touch it, you can hear it, you can see it, then that's definitely got an even stronger ability to move in. So put credit spread plus call credit spread is called an Iron Condor. Don't get excited about the name. It's just when you trade a put credit spread and a call credit spread together, those two together are called an Iron Condor. So let's move to our list and see what's first on our list. Let's look at Carvana first. Some folks in our community, I think it was Kat, Andrew Kat, you are the one who brought up Carvana yesterday, and we're in the middle of the Christmas Credit Spreads Challenge, and the Christmas Credit Spreads Challenge is going amazingly. It's going gangbusters. People are making really good money. I know gangbusters may not be something a lot of people say, but I am not everybody. I'm a very unique young lady. In case you didn't already know that, I am a rare bird. Okay, so looking at Carvana. We're looking to maybe do a call credit spread and a put credit spread. So let's look at both. Now, you see that we've got trending going up. Why do you think it's okay to do a call credit spread and a put credit spread today? And it is because today's Wednesday. We're getting to the end of the trading day today. That means there's only 2 more days left in the cycle. And as a seller, price expiration, the trade expiration is good for us. Time decay is our friend. Time decay is our friend. So if we can get on good trades the day before, 2 days before expiration, believing price will only do so much moving, that's how we can make us some money in a short span of time. Andrew Cat said, yeah, it was by mistake. Couldn't figure out which one. I tried both. It's an Iron Condor. Yeah, when you do both, it's called an Iron Condor. All righty. So let's look. Trade has been going up. Carvana has been going up for a while. I am going to show you the top side of this, or where we could potentially find us a top side number 2. So we're looking here. If you look at, you always want to chart for credit spreads. Don't skip over this step, okay? If I could impression anything in your head, if I could impress anything upon you, it is that you should chart first. I have been bad in the past, not anymore, about just looking at the stock, seeing what it's doing right now, this minute, not looking at the chart, not looking back in time and seeing, just Just because at this particular moment, it may be coming down. That doesn't mean it's been coming down for days or for hours or minutes. It just means it's coming down right now. So you should definitely look at the chart to see where's your support, where's your resistance. I'm looking on the daily chart because we are going to enter this trade today and have it go until Friday. So we're going multiple days. So you do want to have a look at the daily chart. You can also look at like a 4-hour or something smaller, but you definitely want to look at the daily chart. All right. So support I see is at 55.83. Underneath this gap that is here, gaps can provide support and or resistance, and there's a gap here. The gap is between 55.83 and 58.10, right? There's a what's called a buyer's gap because there's buyers hiding in here. They got skipped over a couple of days ago when the price jumped. Yesterday, when the price jumped up in the pre-market, they got skipped over. So the bottom of a gap and a buyer's gap would be the support. So anything below 55.83 is going to be something we can look at, right? So we're looking for below 55. Did I write this down? Let me see. I'm on Carvana. We're looking for below 55. And if we were to go look and make sure I got enough time here, because we need a few years to go back to the top side. Carvana hasn't been up here in a while. So we need to look a little further back to find out where's resistance. So as you can see here, I made it small so we could see, but the current price is 58.29. And if you look back here, where we're looking for peaks and valleys when you're looking for support and resistance, and you see back here, there is some resistance here in the 5 and May the 4th of 2022, and then even August 16th of that same year. So let's zoom in a little bit in that time frame. If you see here, right here, you've got, there we go. This candle right here was a resistance back on May the 4th. That's 58.96, which is currently where we are. And then a little bit later in August, you have something similar. If you were to go and look for what could be a little higher up, because you want to make sure that price is currently in that area. So you want to make sure that you're getting in a comfortable place. The next resistance is all the way up at 81. Now, I wouldn't necessarily go all the way to 81 to find a strike, but there's other ways to find strikes. So let's go look. 81 is the next resistance. That's a little high. Okay, let's go look. We're going to look first at the put credit spread, because put credit spread, I need more than 4. Put credit spread is we're trading with the trend first. Trading with the trend. And we saw that 55 was our support. Looking here at the plus minus number, if you've been on with me any number of times you see me, I kind of hit the same, I hit the same stuff, right? As far as this goes. Yes, there are nuances, but I pretty much follow a process to make sure that we're picking strikes. Okay, so plus or minus 5, the implied volatility, or this is what the broker says it could possibly move, is plus or minus 5. So you got 58 at this point. We know that 50, 50, take 5 away from that, going to put you at 53, but we do know that support is at 55. Okay, I want to add something here that is not here, and that is I need the probability out of the money. Probability OTM is what we need to add to our list. Net change, I don't need that. And last X, I don't need that. I do need probability out of the money, and I really want to have delta. Nope, don't put that there. I'm under, this is in, I'm in Thinkorswim. Delta, there we go. We need delta. Those are the things I use to help identify good places for strikes. Y'all have seen us talk about probability out of the money several times. So the 55 strike price, which we do see as support, has a 69% probability out of the money. That's, not bad, but it's a little maybe not as comfortable as some people would like it to be. If you want to get to the 53, remember we talked about the 58 minus the 5 gives you 53. I know I talk the numbers fast, but don't y'all with me. 58, take away the plus minus number, gives you about 53. If we want to look down here in the 53 range for our strike price between 55 and 53, that's an 80% probability out of the money. Let's see. Switch over vertical. So 54.55, this is this Friday. Yeah, 54.55 is paying $21. Now, we said this was a 70% probability out of the money. So Notice probability out of the money on the vertical screen goes away. You have to be on the single spread in order to see probability out of the money, right? You got to be on single. If you go to vertical, probability out of the money goes away, but you can still look here. So 52.53, which we talked about, that is paying $17. Probability of 52.53, which is 5 down below 5 below where current price is. Yeah, there we go. That didn't want to come out right. It's paying $15 right now. Okay, 52.53. I'm gonna go ahead and look at that. Now remember, as I said before, I am not a financial advisor. All right, I am not. So I'm just talking about what I'm talking about. Okay, and if you're listening, then you're listening to what I'm talking about. That's how that goes. If you're with me, then you're listening. I'm talking. I'm not telling anybody to do anything. You are the CEO of your own portfolio. If you like it, then you go for it. If not, then don't. If you're not sure, use it and do it in your sim. If you want to learn more about what's going on with credit spreads and stuff, I've got resources that can help you to learn the whole ins and outs of credit spreads. You can go to my website, educatortotrader.com, and you can see all the stuff you want to see about how to do vertical spreads, right? I keep the prices reasonable, but it's got to cost you something. All right. So that was a 52.53. Y'all just heard it click. Y'all just heard it click for $15 in premiums, right? So we're using, that's a one spread. So we're using $100 of collateral in order to make 15. That means we're putting $85 of collateral up. Now, where this gets to be really good for you is if you can use that same $100 of collateral and also do the call credit spread side. Also do the call. We talked about, let's go. I'm going to go back to single because I want us to pick a strike. We did see that that Carvana is currently at resistance. Remember when we were looking at this chart, we saw that Carvana is currently at resistance. So we went above that with the thought that it is going to hit the resistance and then, do a little turnaround, which is kind of what it's doing today. Notice we're at resistance and this red candle is today's candle. Carvana is having a little bit of trouble going up any higher, right? So what we're going to do is look for a number above here, at least that 5 above here, that we can see where we can get some good premiums up there too. All right, so let's see. We're on the single chart. Yes. We got the +5. So if we take the 58.6 and we add 5 to that, we're at 63 and some change, 63, 67, 63 or 64. I just jumped from 63 to 67. No, 63 or 64. All right. So we're looking at those. Probability out of the money. 63 has a 74%. 64 has a 78%. 65 has an 82%. Let's switch over to verticals and see which one we like. 64 paying $14. 65, which is 7 away from where we currently are, is paying, it's not paying that. It's paying $10. 65, 66 is paying $10. So we already took in 15. We're going to add this 10 on top of that, right? So now we're going to receive $25 and we're only leveraging that same one spread. We don't put another piece of collateral in there. We only have the one. So did we like 65 or did we like 64? I think 64 was the one that was the 70 something. Let's go back single real quick. 64 has a 78% probability out of the money. Well, I'm actually comfortable with that. But if you're not, then you're going up to the next one. 68% is 78% is, 78% is, that's a C in class. For those of you who are students, that's a C. 64 is paying $22. Let me see if 65, let me see if it's going to pay a little bit better. 65 is paying $11. I'm fine with $11. And sometimes you have to watch yourself. Don't get greedy because, you can get greedy and get a little too close, right? What did we pick? 65, 66? 64, 65 is actually comfortable with me, but I'm going to go with 65, 66 because I'm on the call with y'all. 65, 66, and it looks like it paid $12. There we go. Paid $12 in premiums. So this is $27 in premiums. You collected premiums using $100 of collateral. So really you're only using $73 of collateral because the broker just gave you the money. When you're doing credit spreads, the broker gives you the money right away. As soon as you enter these trades, the broker gives you the money. All right. That's Carvana. Again, not a trade. Nobody's being forced to do anything. I'm just telling you what I see, and that if you like it, you go see too. Let's see what's next. That was Carvana. Let's look at Save. Save is Spirit. Save was on our list, but I didn't trade it till yesterday. But it was on our list for the week. Here is Save. Boom, boom, boom. Let me make it a little bit bigger so we can all see. So those of you who are looking on your phones can see what I'm talking about. What you're talking about. Also have an upward trend, probably because we're in the holidays and people are traveling. And Spirit, Save is Spirit Airlines, by the way. And they've been on an upward trend since back in November or November 13th. They've been on an upward trend, right? So still upward. You can go with we trade with the trend initially. And then if we want to do the other side, we look at that. But if we're looking here for what would be our support here, I would use this candle here as support. It was resistance back here. But once price gets past it, then it becomes support, right? I would use that as support. If I was looking for another one, I would look at another one down here. Now, this trade is only lasting for 2 days. So you can't go too far. There won't be premiums there. You want to be close enough to get some premiums, but far enough away to not get burned, right? Not get burned. We're looking at Save now. Save. All right, so let's see. If I was looking at supports, I was going there. Let me go see what we see for resistance. I'm going to take this one off. Resistance is up here at 1678, but there's a gap that it's in the middle of filling from over here. That's what that's all about. There's a gap up to 1641. So I would go above 17, above 16.78. So I would go up to 17, and I would go down below this support of 15.6. Actually, you might be able to go a little bit further. Let's see if we can get anything below that that's going to offer us some good places, and what's what we're going to do. Let's go look at Save. I'm on the single chart again, plus or minus 1.8. Plus minus 1.8. So if we add 1.8 to 16.2, we're at 18, which I said 17, which will put us a little bit closer than we probably might want to be. And to take away 1.8 puts us in the 14 range, 14.5, somewhere in there. Those are good premiums, child. Them was good premiums. And the Cat, yes, those are good premiums, Miss Cat. So let's look what we got for singles. If we go up, we go down. So we're going with the put credit spread first because we're trading with the trend going up. Probability out of the money at 14.5 is 74. 15. Why does this feel backwards? This turned around. This is weird. This number shouldn't be 80 something. These numbers are looking wonky, but let's see. Okay. These numbers usually should go upwards. See how I've got a 62 hiding in here, 60s hiding in here. That's weird how the numbers are mixed all up. 14.5. That is probability out of the money. Yep. 14.5, 14. I would look in there. And we said we were going to look at 17 or 18. Said those are good places too. Probably 18. 17 puts us 80 cents away, and it's a 1.8. So let's go with the put credit spread first. 14.5. It says 30 debit. This should not be read and say debit. So that's not good. It should say, but 55-cent credit is not X. What's going on? I'm in the sim. Why are you tripping? Because this should say, credit, but at 55, it's only a 0.5 spread. So it can't be worth any more than $50. So you can't get $55 on a $50 spread. It doesn't work like that. It's no work like that. Okay. 13.5. This seems accurate, but how come the next one up is not accurate? That's not accurate. Okay, we're going to have to leave this alone because it needs to be right so we can see what we're really supposed to get. And right now, these numbers are looking weird. Let's go over to the other side and see. I'm not sure why that's doing this in Sim. I'm leaving safe right now. I don't like the way this is looking, and I don't want no issues out of nobody's account where they're like, you said no. I'm looking over. Let's go look at a firm. Look at something that ain't tripping. That don't seem to be tripping anyway. This is a firm. A firm is running up good because I don't know if you all know that a firm said they were starting to offer the buy now, pay later on buy now, pay later on at Walmart. Did you all know that they were doing that? I didn't know they were doing that. Somebody in my community mentioned it, said they were doing buy now, pay later at Walmart. So, Affirm is the people you see on Amazon when you buy now, pay later on Amazon seems to be, and I think I may have seen it on Shopify. Some places that's who Affirm is a people. There's a fintech. They're giving out monties. So you see here that this is you can have a put credit spread here as well. Because we're going up, away. Let's see, there's a gap here. Let's do our charting first. You must do your charting first. 43.73 is the bottom of that buyer's gap, and 46.03 is the top of that buyer's gap. So if we're looking for a firm, looking at something below this 43.73. So let's go look. We're going to single life. Plus or minus 3. Currently, the price is at 48.78. We subtract 3 from this. We're at 45, right? We just said that the bottom of the gap is about 43. So somewhere in between these two, let's take a look. 45 puts us at 86% out of the money. 43 is a little further away. Probably not going to be as much money down there. So let's look at maybe 45.5 or 40. Yeah, 45.5. This puts us in a plus or minus number. 45 or 45.5. Let's go. 45.5. This is another 0.5 spread. 0.5 spread means $50 of collateral. 0.5 spread is $50 of collateral. How do you know what I mean when I'm saying the spread? It's the difference between these two numbers. The difference between 45 and 45.5 is 0.5. That's how you know when I said it's a 0.5 spread, right? The difference between these two is 0.5. I just typed something. Where'd it go? Oh, there it is. So 45.5 and 45 is paying $7. $50 collateral, collect $7, take off $1 for fees. You could go with it, but I would probably change this to 40, change the 45 to 44.5 to make it a one spread. And then you're going to collect $11 or $12. I like this better because if you're going to pay $1 in fees, you don't want to take in 7 and pay $1 in fees and get 6. If you can take in 12 and pay $1 in fees, then you're going to keep 11 or 12. You'll keep $10 or $11, which is, this is a 11% return on that collateral for a couple of days worth of trading. So I'm going with 44.5, 45.5. I'm going to go with that one. Okay. 44.5, 45.5. What are we on? Affirm. 44.5, 45.5. Put credit spread, and it was $12, I believe. It's still in the monitor stage. It's still working. Oh, well, it was working. Now it's done. See, it finished. It finished. Okay, so now let's go see if we can do a call credit spread also. Call credit spread. We wanted to go at least 3 above. Remember our plus minus 3. We're going to add this to the 48.74, which means we need to go up to what? 51? 51 and some change. 51.74 or 52. Well, 51 is a 72 and 52 is a 79%. So I like 52. Vertical 52. 52 is also paying $13. 52.53 is paying $13. Oh, what we didn't do, wait. Before we pick that, wait, let's go look on the chart and see if we can find us some resistance up here. So we can see where we are as far as, we can see where we are as far as resistance. Looks like we're here. Oh, no, not there. Looks like resistance is up here at 75. That's a pretty big jump. Pretty big jump. 75. Hold, please. All right. The current price is at 48. No. Here we go. I would go right in here. There's some resistance at 50.55 from back at January of 22. January of 22. Okay, $50.55 is resistance. That gives us a place to make sure that we're, but beyond that, which 52 would work for us, right? 52, paying $13 in premiums. Okay, $13. What I put? 52, 53. Yep, paid $13. 52, 53. Call credit spread, paying $13. So this is $25 in premiums using $100 of collateral, because you're able to use the same collateral for two sides. You don't have to put any more collateral up for the trade. Okay, so far we put $100 up, $200 up, sorry. We put $200 up, and we've collected what, $50, $52? Yeah, we collected $27 from the other trade and $25 for this. So we've collected $52 using $200 of collateral so far. Okay. If y'all got any questions, please put them into the chat. Put them in the chat. I got one more we're going to look at. We're going to see how we can use one more $100. We're going to look at Carnival Cruise Lines. We're going to use one more $100, and we're going to try to put on a trade for Friday. That means the trade, our money is going to stay in this trade until you turn it off. It's going to expire on Friday either way, but you can also turn them off early. If once my trades get to like 80% in profit, I will buy them back. I buy the close, because you sell to open, collect your $12, $13, $14 or whatever, and then you buy the close. I usually buy the close for $1 or $2 as long as it's above 80%. And then I can release the buying power, keep my profits, and I'm good to go. Good to go. All right, let's look at Carnival Cruise Lines. Carnival Cruise Lines. Anybody good going on a cruise this holiday? This is peak season for people to go on cruises. Is around the holidays. I did not know such a thing was a thing, but it is a thing. Okay. Here we go. Resistance is up in this area for Carnival Cruise Lines, 1933. And support is underneath this gap that's over here. I'm going to make this bigger so we can see what's happening, what's going on here. Okay, let me change this back to a pin. There we go. So we've got support and resistance. Price is hanging it basically between these two zones right now. So we can look and see, is there an opportunity for an iron condor that's going to be for Friday expiration? Friday expiration. All right. So this is another one that's been going up for, kind of trending up for a period of time. So let's start with the put credit spread. Okay, below 18, it shows here we want to get below 18 where our support is. Let's go look. Put it on single. 1.5. Subtract 1.5 from our 18.4, 18.5 means we're at like 17, right? 17 is a 77%. Another 50-cent spread, because there's 50 cents between these strikes. So another 50-cent spread you can work with. If all you want to leverage is $50, you can do that. We looked at 17. Yep. So we'll look at 17. Change it back to vertical. 17, 16.5 is paying $10. That's a 20% return. I like those numbers. 17, 16.5 is paying $10. That means you're leveraging 50, but you're receiving 10. Oh, it is a thing, Kat. I didn't know that. I didn't even know it was a thing that people would go cruising. But you know what? When I've lived in countries where it's colder, which probably is the same thing here, that when it's cold, if you go on a cruise and they're going to take you to some nice tropical place in the Caribbean, then you enjoy the warmer weather. People fly down here from the cold countries, hang out in Florida for a few days where it's cool down here though now. It's just a little cool outside, but I'm sure not as cold as it is up north. And then you go on a nice little cruise. That makes sense. I get it. Okay, so 16.5, 17, only 50-cent spread, and then we collected $10. Right? We collected 10. That's a 20% return on your collateral. You leveraged 50, they gave you 10. And then we want to go up a $1.05, 1.5. And so that puts us at what, 20? Let's go see what the single number looks like for 20. 79, we could go up to 20 or 20.5. Either one would be fine. 20 or 20.5. I'm going with 20. Collect 9 or 10 more dollars. From the other side, 20.5 means you're going to collect another $10. So you're collecting a total of $20 collected with $50 of collateral. So what we've done so far is we have used $250 of collateral, right? We used a buying power. You aren't even spending any money. You use $250 of your buying power. And collected $72 in premiums. When you get the money from the trades, that money is yours to do whatever you want to do with it. If you want to take your $72 and then go and buy some other things with it, buy some stock with it, buy some calls with it, do something like that with your profits, premiums, then you can go take the money that they just gave you to go and do something else with it. If you make $72 after leveraging 250, that's about a 30% return, huh? Let's see if we take 72 and divide it by 250. 72 divided by 250. That's a 28% return on the leverage money. You haven't even spent any money, and you're going to let it leverage for 2 days. $250. Of course, you can scale it up. That's one thing I love about credit spreads is you can scale them up. If we decided to do 2 contracts of each or 3 contracts of each, you can scale it up as far as what you're going to get for profits. Of course, when you do more contracts, you got to leverage more capital, but you can also look a 28% return in a couple of days. Not so bad. Not so bad. Okay. Anybody got questions about what we went through on here today? Today we looked at credit spreads. We looked at Affirm. Affirm, Save. No, not Save. Save didn't act right. We looked at Affirm, Carvana, and Carnival Cruise Lines. We left Save alone. It was looking kind of crazy in the sim. It looks fine in live, but somehow in the sim, it's got something going on with it, right? Be sure to like and subscribe to the channel. Hang out with us, right? We're still in the middle of the credit spreads challenge. We're still doing that. Educatortotrader.com is where you can find all of our resources. And on the YouTube channel, the courses and trainings are all there. Yep. If you're not sure about charting, If charting isn't your thing just yet and you want to know more about charting, then you need to go and do the free webinar. Start with the chart.com. Let me put it on a banner so that way you can see it. Start with the chart.com. Where are you? I need a banner. There we go. Oh, it can show down here. Start with the chart. Basically, it's a free webinar where you can go and see how to read stock charts. Talks about candlestick patterns. It talks about moving averages. It talks about how to put stuff on your chart. Kind of talks about gaps. It's all that stuff, and it's free. You can go and check it out. I've created that little webinar so you can have an indication of how do you chart, especially for credit spreads. We charting for credit spreads so we can make us some money. How does CarMax affect Carvana? That's a good question. Is it because it's in the same industry? Yes. Anytime you got like FedEx had earnings yesterday, I think, and then you'll see UPS and DHL. Those people will also have a move based on like maybe those are sympathy movements. Like people have sympathy pains. So Carvana, CarMax, when you see those things, they can affect each other. Well, I say affect. They don't necessarily affect, but people who are in looking and trading in that space may be looking at some of the same things. And I think somebody said CarMax has earnings coming up. It must be next week. I didn't see it on the list for earnings this week. Do you know when CarMax is having earnings, Kat? And I think it's because it's in the same industry. But somebody said CarMax had earnings, but I didn't see it on the list for this week. Maybe it's for next week. But yeah, things that are like when you have all the semiconductor stuff together, like NVIDIA will make a jump, and so will AMD, and so will SMH, and so will Taiwan Semiconductors. They can move together. They move in sync a little bit. All right. Okay, everyone. It's been great hanging out with y'all for about an hour. Y'all come over, hang out. If you want to join the membership, hang out with us in the mornings and in our exclusive Telegram as we trade together. You feel free to come and join us. The bit.ly, you can go to bit.ly, bit.ly.e2t membership. Oh, there it is. bit.ly.e2t membership. We trade together in the morning. Literally, we're on the call while the market is open at 9:30 in the morning. We have sessions every Wednesday evening where we do training. And then once a month, we do coaching calls. And we have an exclusive Telegram. We all hang out together and trade together where I am the head coach, but there's other people there besides me. CarMax has earnings tomorrow. Let me go see. Because I'm on the earning. I can't believe that that my dudes at Earnings Whispers, that's where we get our earnings stuff from. Earnings Whispers didn't mention CarMax. Oh, duh, I see it right there. It's right there. CarMax. Oh, and Carnival has earnings tomorrow too. Maybe that's why those premiums are up so nice. There you got CarMax. It is tomorrow. Yes. Everybody's welcome. Please be when we're doing. We did Carnival Cruise Lines, but since they have earnings tomorrow, you may want to hold off till after the earnings trade to see how that plays itself out. Because earnings is called a binary event, so you don't want to have something run past your strike because it had good earnings. It can run. That's how those track stars run. You can tell I never was in track. All right. Thank y'all. I'll see y'all later. See you later. All right. Bye.